Good morning, everyone. Welcome to the Working Trader, where we look at the Euro USD and GBP USD and come up with trade ideas for the day, if there are any. So let's jump right into it. Looking at the Forex Factory. So today is Friday. We have core CPI. So this is definitely a major news event. So we'll expect a lot of volatility to be injected in the markets at this time. Yesterday we didn't have anything really except GDP on the pound and then unemployment claims on the USD. So let's look at the charts and see what was presented. So pretty much this is yesterday's candle for the Euro USD. So let's jump into it. So yesterday's candle was pretty much a doji candle. Nothing happened really, so that means opening price, closing price round about the same, and then relatively equal sized wicks on either side. So price just went up, came down, and came back almost to the opening price. Okay, so obviously we are swing my bad swing is bullish. We broke structure over there. Internal is bullish. We broke structure over there. This is our weak swing high as well as our weak internal high, and then this is our strong internal low, and our swing strong low is at the bottom. Okay, we mitigated this range. Okay, then we've had a reaction, and now we are getting a reaction from this supply, fractal supply. Okay, we had a reaction right there. So this could be a reaction, for price to continue down. Okay, take out these lows. All right, mitigate deeper into this range and maybe reach this pivot area. Okay, or this is just a small pullback. All right, maybe reach this area or sweep this low. Okay, sweep this low. Okay, and then use that as the catalyst with the news, all right, to take price higher. Okay, so those are two possibilities that we have. Okay, because we have CPI, so it's highly unlikely that it will be consolidative, okay, by the end of the day. So we could expect that price might push down strongly, take out these lows, and then react and then push up, or it might just continue lower, take out this low, mitigate deeper, push up. Okay, so either way, it means that we could be looking for sales short term, okay, towards this or towards that. All right, or if you're not inclined, then you could be waiting for longs, okay, after this has been taken or after this has been taken. Okay, so looking at the 4-hour. So looking at the 4-hour, and after NFP, this was the NFP candle. Okay, clearly price has just been ranging. Okay, price has just been ranging. So right now price is stuck in this range. So either price will come down, all right, sweep this low, okay, in order to start looking for longs. Okay, fine, we do have relatively equal lows in there, but this is all within the range. Okay, so we could sweep the low of the range, okay, and then target the high of the range, or we could sweep the high of the range and then maybe come back into the range, to push lower, maybe to take out this, mitigate that, or even reach the extreme. Okay, so right now we'll probably have to be a bit more reactive, right, and wait maybe for the news. Okay, wait for the news to see what will happen, and then act accordingly afterwards. All right, so looking at price, all right, obviously we have relatively we have a trend line right there. Okay, so this is resting liquidity right on this side. So if price decides to push up, then I'm positive all of this will go. And then remember, we have a weak swing high for the daily and a weak swing high for the 4-hour swing. So those are likely to be taken. Yes, on the 1 hour, this is a strong swing. So when price goes up there, we might get a reaction, but more likely than not, I'm anticipating that to fail. Okay, I am anticipating that to fail. And then so our intent now is shifted bullish clearly. All right, and then we have come back into the range. All right, we've come back into the range. So if I use my premium discount tool, top of the range, low of the range. Okay, so we already mitigated. So this is in the discount of the range. Okay, this is in the discount of the range. So what I may be looking at right now is we have that. So these are relatively equal highs. Okay, yes, we had a sweep right there, and then we came down, and then we failed to sweep, and then had a strong push down. So my expectation is that these areas will fail. There's resting liquidity over there, as well as resting liquidity up here. So when price starts to push up, I'm thinking it's just gonna go. Okay, it's just gonna go. Okay, and remember, this is a game of probabilities. Okay, so you may have the right idea and fail to execute and still have losses. Okay, this is a game of probabilities. Right. So, but my expectation would be that we either will probably take these lows, okay, sweep these lows, have a reaction, okay, take out these highs, and then possibly take out all of that, okay. Otherwise, we may continue, all right, take these lows, continue lower, okay, and then maybe after that, continue bullish. So obviously on lower time frames, you may be looking to go short, maybe towards this low or towards these relatively equal lows, and then after that, then look for going long. Best bet may be to wait after CPI, so that we'll have a defined clear range, all right, or at least we'll break out of this consolidation. Right, so I'm positive with CPI. Once CPI comes out, we'll break out of this range. Okay, either to the upside or to the downside. Okay, and then from there, then we can trade up appropriately. Okay, if it breaks to the downside, the expectation would be that this is a liquidation. Okay, of these lows, and then we'll be looking to then capitalize on the push up. Okay. If it breaks to the highs first, okay, without taking the lows, then it may be a bit tricky. Okay, it may be a bit tricky. But looking at the higher time frames, okay, higher time frames, they are bullish. Swing and internal for the daily, swing for the 4-hour. Okay, so if we do start by breaking bullish, we might have a reaction. Okay, maybe new areas created, and then from there start looking for more longs. Okay, so those are the scenarios that I'm anticipating for today. Okay, those are the scenarios that I'm anticipating for today. So let's look at the pound. Okay, let's look at the pound. So we broke structure, swing and internal on the daily. We had a strong push out. We had an internal pullback. Now we've mitigated this fractal supply and we are reacting from that supply. Okay, we are reacting from that supply. On the 4 hour, so on the 4 hour, this extreme supply held, okay, that is nested within this daily fractal. Okay, and then our swing is down there. So the way price is falling, we are likely going to take these lows. Okay, and then who knows, we might reach this extreme. So remember, this is also a week for our low. Okay, it gave a reaction to the extreme, and then now price is likely to come back and possibly take out this low. Okay, this is the scenario on the pound. Okay, on the pound, looking at the 4 hour. What else do we have? Nothing clearly. And then looking at the 1 hour. Looking at the 1 hour, of course, we have our week high. Okay, so this is our swing at the bottom. This is our swing at the bottom. So this is our 1 hour swing wick. Okay, and then this is our internal range. This is where we are. Okay, so internally we are bearish. Okay, internally we are bearish on the 1 hour, which is aligned with the 4 hour. We had a sweep. Okay, we had a sweep of that, right? And then we had a strong push down. Now we've had kind of a structure break, substructure break. Okay, bearish, aligning with the internal structure, which is bearish. Okay, so now we've had a break there. Okay, and then push down, push up, and then push down. Okay, so clearly we are bearish, and clearly this low is gonna go. Okay, that low is going to go. So when that happens, like looking at this, we don't have any clear levels, right, to rely on except at the extreme down there. Okay, except at the extreme down there. So we could expect price to continue, all right, at least to mitigate this for our demand before a reaction upwards. Okay, however, ideally would want to see a sweep of this low. Okay, a sweep of this low, and then start looking for longs. Okay, so the news may cause that to happen. Okay, so we have CPI, remember, so CPI may cause that to happen. Okay, but for the pound right now, it's looking like we may be looking to go short. Okay, we may be looking to go short within this range, and then, you know, targeting any of these areas. Okay, obviously this is first area, so we could look for that. Price may sweep this, react, come back, and then maybe continue. Okay, that's a possibility. That's a possibility. So yeah, so for the pound, it's kind of more on the bearish side. Okay, so that's what I'll be looking at. Okay, that's what I'll be looking at for the pound. If we take this, then look for longs. Okay, maybe towards this area. And then what else? Yeah, if that doesn't work, okay, then we wait for this low to be swept to then look for longs again. Okay, or you could just be trading with the in line with the internal trend. Okay, in line with this internal trend, which is clearly bearish. So we've mitigated. We've made low, high, lower, lower low, lower high, lower low. Okay, so clearly now everything is aligned. Internal is aligned bearish. Substructure within the internal is also bearish. So all systems go, we're looking to go short. Okay, so that's it really. So yeah, this is my analysis for today. Thank you for watching, and please leave a like, leave a subscribe, and leave a comment as well if you're finding value in this material. Otherwise, have a good day and happy weekend, and we'll see you next week. Working Trader out.